Welcome back. Jared Roboski here with CMG Home Loans. I want to review this article from Realtor.com, 2023, the Year of the Homebuyer. This is their annual review and predictions for 2023. So let's jump right in and check out what they think is going to happen here. Go over to Realtor.com. Here's the article, 2023, the Year of the Homebuyer. Our bold predictions on home prices, mortgage rates, and more. It's safe to say we've never encountered a housing market nearly as unpredictable as the one we're in right now. After months of navigating wild fluctuations, home buyers, sellers, owners, and renters are desperately trying to read the tea leaves to figure out where real estate prices, inventory, sales, and mortgage rates are going in the coming year. So basically what they're going to do is break down their annual housing forecast, where they think rates are going, things like that. Scroll on down. Housing forecast 2023. Buying power on the decline. Typical mortgage payment will be higher, up 28% to $2,430 a month, pricing many buyers out of the market. Buying power is on the decline, or has been all year, with mortgage rates rising. But what we've seen this year also is home prices fall, and that has really helped a lot of people be able to afford mortgages. Also, we're off the highs on mortgage rates, back down to the high fives, low sixes at the time of recording this video. They think mortgage rates will remain elevated at 7.4%. That I will definitely have to disagree with. That was the high of the mortgage rates about a month ago. Maybe they did their research about a month ago, and that's why they made this claim. But since then, we've seen inflation starting to tick down, and then the main drivers of inflation are coming down a little bit. So I believe the top is in for rates and inflation, and then we'll start heading down. Mortgage Bankers Association believes that interest rates will be around 5.5% next year. So we're headed down. Growing but slowing. Home prices will continue to rise, but at a slower rate. Hey, a 5.4% growth rate is still above historical trends at 3 to 5%. So 5% is a fantastic growth rate. Now remember, purchasing a home is leverage investing, because you're not having to buy the house cash, right? You can always buy the house cash and pay 100% of the purchase price, but you could do, let's say, 10% down on a $500,000 home. That means you only put $50,000 down, right? Now, if this home grows at 5% next year, then that house goes from $500,000 to $525,000 in that 1 year. Well, you just made $25,000 on a $50,000 down payment. That's a 50% cash on cash return. That is an absolutely amazing investment. And that's what makes real estate investing, or even buying your primary residence, such a good deal, because you're not putting 100% down, but you're getting that percentage gain on 100% of the home value. So it's leverage investing. Stocked up with a silver lining. Inventory will still lag 2019 pre-pandemic level, but will be up from 2022, giving buyers more homes to choose from. I completely agree with that. We're seeing inventory go up back to more normal levels, which is fantastic. It gives buyers a better opportunity to find the home they really want. And then when they find the home they want, they can put an offer on it, and they might be the only offer on that house. And that's fantastic as well. Having to compete against 10 or 20 other buyers like we saw the last 2 years was really unfair to the home buyer. So I'm happy to see it come back to normal, and see markets balance out a little more. Home prices won't drop, defying expectations. I believe this. I think that the home price drops have happened this year. I do still believe you'll be able to get deals at least the first quarter of the year in 2023. But once rates continuing to come down, you're going to see home buyer offers come in at full price. And then once there's multiple people offering on the same house again, then they're going to go back to overpriced. So it's definitely a great time to get in while you can still get a deal. Remember, the only reason home prices came down and you can get a deal is because rates went up. Now, when rates go back down, it's going to go back the other way, right? And we still have an undersupply in housing. So if you're planning on buying in the next year, I would suggest the first quarter of next year. Remember, if rates are higher than you would like them, you can always refinance later. I am a mortgage loan officer. You can apply with me if you need a home loan. My NMLS number is 408959, and my contact information is in the description of these videos. The number of homes for sale will surge. Like they said, up 28%, I believe we saw. 22% up. So yeah, that's good. I think they've gone up a little more than that this year compared to last year, maybe even double. But from what I saw, just in the Houston area, in September, I looked. There was 9,000 homes for sale. When I recently looked at the end of November, there was over 11,000 homes for sale in the Houston area, which is good. A lot of homes to choose from. Now, that is from every price point, so that doesn't mean there's 11,000 houses for sale at the price you're looking for. But that's it. That's this article. We'll get into some other publications, articles, and review their articles and see. But overall, we think rates are going to come down next year. We think that the traction and home buyers in the market to purchase will increase. And we think the market will normalize a little bit. So overall, a good market for purchasers and also a good market for sellers. It's still a good market. Homes are still selling faster than 60 days from what I'm seeing. They're still selling in the Houston area, probably all of Texas. They're still selling in about 30 to 60 days, which is normal. A 60-day turn time on a home is normal, completely normal. So thank you for joining us today. Have a great